Okay, so I know y'all see the former president Donald Trump on the thumbnail. And I don't want to make this video all about politics, but one thing that I think we all would admire is if we can find a way to use legal loopholes to our benefit. Legal loopholes, not illegal loopholes, to our benefit. So with that being said, hey, I never heard anybody talking about this with regard to a 529 plan and how Donald Trump made it advantageous and changed the game for the 529 plan in 2019. I just haven't heard anybody talking about it. So we're going to talk about what is the 529 plan, how is it beneficial, and how I plan on using a law that was signed into place during President Trump's tenure in 2019 to speed up my payment on my student loan. Well, not speed it up, but to make it advantageous for me to make a student loan payment using this vehicle. So stay tuned so y'all can find out what this secret is a legal loophole, which are the only real loopholes. Hey, tax evasion is illegal, tax avoidance is dope. Let's talk about it. Let's get it. Yo, what's up? I'm Marcus. You're the channel The Debt Free Dad, where we're talking financial takes, financial topics. We're following my family's journey to financial freedom, and I give my opinion and takes on some current events, finance topics, anything that I may see out there that just make you say, that was stupid. So, as always, disclaimer, licensed attorney, but not your attorney. So, this isn't legal advice or financial advice. I'm just letting y'all know my opinion and take, and for entertainment purposes only. So, let's talk about it. A 529 plan. I did videos before on a 529 plan. I had 529 plans for my kids. I have one for my son, one for my daughter. What the hell is it? A 529 is essentially a tax advantage saving mechanisms to invest in your kids' education. So think of it as a 401k or IRA type of thing. You make after tax contributions, and that money is allowed to grow in the market. And as long as you use that money for a qualified expense, you avoid any tax obligation on the back end. So it's definitely dope. A lot of states offer them. States have their own specific 529 plans. You can get them through your financial institution. And what are some of the qualified expenses? Essentially anything associated with education. You can use it for trade school, for college, for undergrad, for graduate school. You can use it to pay for a private high school. You can use it to buy computers and equipment for school. So there are a lot of things that qualify as qualified expenses that you can use this on. Well, what happens if you don't use the money for a qualified expense? Well, if you put money in a 529, you don't use the money for a qualified expense, you have a couple of options. One, you can transfer it to another beneficiary. You can identify another beneficiary, transfer it to them, and maybe they can use it for a qualified expense. Or you can actually pull your money out. Now, here's a big thing. If you pull your money out of a 529, the contribution is not taxed. Why? Because you pay taxes on it before you put the money in there. But the profits, the growth is taxed, and it will be taxed. So you have to understand that there is some tax obligations. If you use it for a non-qualified purchase, you'll have to pay at your current tax rate. And a lot of states implement a 10% penalty as well for non-qualified purchases. So that's in short what a 529 plan is. And I think I told y'all before, I have a 529 for my son. I have one for my daughter. For my son, we contribute $300 a month because he's older. He's going to be going to college sooner. For my daughter, we contribute $100 a month because she has the benefit of, we started hers way earlier than we started my son's. As they get to a point where they have to make a determination of what they want to do as it relates to higher education, be it trade school, graduate school, whatever it is, then we will make adjustments whether or not we have to increase those contributions. So let's talk about President Trump, okay? Hey, President Trump get a lot of flack. Anybody who in office get a lot of flack, you know what I mean? I tend to look at politics as, everybody's going to do something I like. Everybody's going to do something I dislike. It's just a matter of how much I like or dislike the shit that they do, but that's just the name of the game. But President Trump has long been touted for his ability to avoid and circumvent taxes. Now, we're not going to talk on the legality or illegality of those particular avoidance mechanisms, but he put something in place in 2019. In 2019, when the tax code was reformed, President Trump put a gem in there with regard to the 529 plan. And honestly, I haven't heard anybody talking about this on the video. I've talked about what a 529 plan is before and showed the contributions and what we're investing in within the policy. But I haven't heard anybody talking about this gem that President Trump signed into law. And hey, when there's something that you do that I agree with and makes sense to me, hey, I'm going to give you credit for it. So what is this gem? Well, anyone can be a beneficiary on a 529 plan. So let's just think about that. So what that means is I can open a 529 plan and make myself the beneficiary. If I want to pursue another educational endeavor, hey, I got a 529 plan that I contribute to and I'm the beneficiary. Well, in 2019, President Trump signed into law a provision that allows you to make payments on your student loan using your 529 plan. Now, again, there is some caveats to how I plan on using it. But everyone, President Trump signed it into law in 2019, everyone can use their 529 plan to make a one-time payment of up to $10,000 towards their student loan. So that's a big deal. Now, where is the benefit of this? Now, not all states, but a vast majority of states allow you to get a tax benefit when you make contributions to your 529. Here, where I'm located, if you're a single individual, hey, you get a $4,000 deduction. Married couples get an $8,000 deduction. So what does that mean for me? How am I going to use it? Well, let's think about it. If I owe $10,000 remaining on my student loans and I work, I pay taxes, I get paid my after-tax money, and I take that money and just pay the $10,000 on my student loan, well, that bill is at zero, but my taxable income stays the same. Well, because where I'm at allows me to deduct $8,000 a year, me and my spouse, it's a big benefit to me. Again, I pay taxes, I get paid, I take $10,000, not to pay directly to my student loan, but I put it inside of my 529 where I'm the beneficiary. I take that $10,000 out, pay off my student loans. Now, $8,000 of that $10,000 I can use to deduct and reduce my tax liability. So I think that's dope. I think that's a big thing. It would be cool if they actually increased it to like $30,000, $40,000, $50,000. But think about it. If you've been stacking up your money for your student loans, you can actually just put that money in, invest, and let that money grow in your 529. So let's say if you start now, in 3 years, you may contribute $7,000. That $7,000 can grow to $10,000, or that $7,000 can grow to $9,000. But you can take that money, put it on your student loan, and if you stay in a state that allows it, you can get a deduction for a certain amount of that money that you just paid on your student loan. So I hope that that makes sense. What is a deduction? All a deduction does is it reduces your tax liability. So let's go back to the example. I make $100,000 a year. I take $10,000 of my after-tax money and I pay off the student loan. Well, when the taxes man roll around, I'm getting taxed at that $100,000 income. Now, this is how it works with the benefit. I make $100,000 a year. I take $10,000 of my after-tax money. I put it into my 529. I take that $10,000 out of my 529. I pay my student loan off with it. My state allows for me to deduct $8,000 from that 529 plan because I'm married. $4,000 for individual, $8,000 for couple. So now instead of being taxed at $100,000 of income, I'm taxed at $92,000 of income. So it effectively lowered my tax obligation. That's a gem. Tax evasion is illegal. Tax avoidance is dope. And if you qualify, if you stay in a state that allows a deduction, hey, you got a chance to kind of game the system and work it to your advantage. I hope this information was useful. If you like this video, check out the next video on the screen. Make sure you subscribe, hit the like button, follow, comment, all that good stuff. Y'all take care. Peace.